It's Thursday. It's not Wednesday. As I said on the video I dropped yesterday. We're doing the Market Mayhem live episode a little bit later. I know I'm a few minutes late. We've been having some technical difficulties. I know our first few episodes of the show have not been an amazing launch. It's been a whole bunch of technical difficulties, but that's all right. It's all good. Because we're back and we got some better camera quality right now, as you can see. I know you liking it already. You like that boy sharp. Yes sir, yes sir, yes indeed. But when we go through all the segments that we have, then we're gonna dive into it. We're supposed to again have my analyst on, but the technical difficulties is like with getting my analyst like on for some odd reason. Like he couldn't hear when we were previewing the live, he couldn't hear me, so we couldn't like converse. But I have him on Huddle here, so hopefully, can you hear me?
I can hear you now.
Bet. All right, yeah. So, all right. So we can both talk to y'all. I'm already live now, so you can just converse with the chat through here because they can hear you on the microphone speaking through my MacBook.
Okay.
So we got four segments. We got the heat check, we got a top trade setup, smart money moves, and then capper facts. And that's what we're gonna break down one of the myths about trading. And then in between all of that, you can throw in your 2 cents from the the fundamental standpoint.
Okay.
But before we get started, did you have any like major headlines you wanted to touch on for the chat?
Well, the major headlines is what we've been communicating about is the United States, the U.S. Treasuries, which is our debt. They're coming into a huge issue because trillions of dollars of it is come due this year, and they can't find any buyers. Matter of fact, their top holders, China and Japan, are selling it and not buying it. So, long story short, it looks like what they're going to do is take away the bank regulations, where now the banks can start heavily buying bonds without any capital requirements because it looks like they have to get someone to buy it.
Yeah, that's gonna fuel the bubble to just get bigger, though, is it not?
That's definite. And you just took the words right out of my mouth, because when they do that, that's going to fuel more government spending, which will only increase inflation. That's going to increase the deficit.
Yeah.
And increase inflation. And we all know when inflation increases, they're going to have to increase interest rates to cool it off anyway.
Yeah. So we're in a bind and we're not doing much, but kind of just staying in it. It seems.
Yeah, and then when they raise interest rates, Federal Reserve raise interest rates, that means the value of all these bonds that the banks would have bought and already have in their books is only going to decrease in value.
So our banks are okay. So what I've been feeling in my because I haven't been diving as deep into the headlines as you do, because that's more of your expertise. I'm more of on the numbers of it all. I've been feeling that within between now and October that there's a possible bank run on the table. How do you feel about that?
That is a huge possibility. I'd say almost definite.
Okay.
Because the G20 summit meeting is going to be November of this year. Now, Europe already said they want their digital currency to be launched and running by October of this year, the latest. And I definitely think they want to see it up and running before that G20 summit meeting.
Yeah, most likely. And I'd imagine so.
Yes, and if Europe is going to have their digital money running by that time, I figure that the United States and other countries want theirs running probably by that time, if not a little bit sooner or later, but I would say right around that time to be as precise as possible.
Yeah. I'd imagine that as well. Now, markets are reacting to a lot of current news in slightly volatile ways. The U.S. dollar is at as low as almost as low as it's been since I think 2022. Let me look at my chart. Yeah.
Yeah, the US dollar, yeah, that's why pretty much daily I want to put out where is the US dollars right now. And most of the time it's down at least by 0.5 to 0.7%. It's
Let me,
taking a beating.
yeah. Let me see. Let me look at my weekly chart. Oh yeah. Oh yeah. We're looking at March 2022 lows right now. Um, if I can, let me go ahead and I didn't actually have the very last low marked off on my chart. Now I do, so I can see where that gets broken at. Um, yeah, that 90, 97, 685 ish area. I feel like price is probably headed for there, headed straight for there. Let me hit that little clip button so we get them pieces. Um, it's we got a little bitty bounce off of like 98 400 ish, but that was just Trump saying the dollar's going to be strong a few like a week ago, just to say it say it just to say it for some reason. I feel like a lot of the way that the Department of Defense has been speaking about gearing up for quote unquote war, and uh, being ready for war with China, like on a from a military perspective. That just came out last night that I saw, or I don't know if it came out last night. I saw it last night. I think it might have came out a few hours beforehand, like midday, something like that. But when it comes to like market manipulation, I'm usually good at kind of sniffing it out, and it was just like it was a little off putting how aggressive uh uh Hexet was about how they're gearing up for quote unquote potential conflict with China. It was just like we're in the middle of trade negotiations, you know what I'm saying? Or we're trying to have trade negotiations, and we're trying to, decrease tension. And then like just having that stance and being so bold on it. And like I encourage folks to go on and see the defense secretary speak about what they're doing and how they're preparing for if you know things were to happen, like he mentioned, if China were to invade Taiwan or things like that, which is it's on that's on the table. It's not an impossibility for it to happen, but it's just like it just seemed really like forced. So I think that might be a little bit of a kind of a market tactic to kind of shade off or split up some of the risk that's happening with Russia and Ukraine ramping up things and potentially having a super escalation going on. So like this is probably when the rest of Wall Street hears everything that the DoD said at the end of yesterday. You got to be really mindful of when they say things, because they said it after the market closed yesterday. That's when they had the little press conference. So when more and more people hear, the more and more people have fear, the more and more people get scared, then the markets are gonna actually react. So I think tonight we're gonna start seeing Nasdaq start pull towards those zones that we were looking at in the VIP chat. Let me go pull up Nasdaq here and see if I can find it. Yeah, there's a lot of bearish volume that's come in, like all the way up. I'm talking about from if we go from May, shoot, if you go from April 20, honestly, starting the 28th of April, there's a lot of um bearish volume been coming into the market, but price hasn't been selling off. You know what I'm saying? So like I think that we can get a cool little buy off this last little demand zone here. We see. Demand
Yeah,
zone.
the Nasdaq is currently down. I just pulled up 0.2% is where it is right now in the red.
Yeah, we got some support sitting down at got some support sitting down to like 20, some potential support. It's not like tested support, but potential support sitting down at 21,500 ish area. Price, I would like to see price test that and give a little bounce. I think we'll probably get that little exhausted bounce. I don't know if I'll trade it at all. If I do, it'll be like a very very small lot size. um but I think whales, it feels like whales are gearing up for another correction, not as big of a correction from like what we're pulling back from, but something to. I mean, we've had a really good run up since reaching that 1700 bottom. So like it's reasonable. It's really reasonable for price to come back towards this like 20K area here and give a good bounce or something like that. That's something I'd really like. And if we're talking about market manipulation, then putting a little bit of extra fear in the market for a situation that we all know is gonna get resolved, then would be a fair opportunity for that. What you think about that?
Exactly. Yes. I would look for some. See if we when we have more tension between Trump and China with these trade talks, and with Europe, China, Japan. When we have sell-offs with the market, we're probably going to be having a few more of those. I mean, pretty big ones where all three stock market indicators are down significantly.
Yeah, there's a
And
lot of there's
what
a lot of bullish signals going out, and I'm just like, it's like there's probably like gonna be a really good little exhausted push, and then I think we're in for a fairly good correction.
exactly what it's called in the stock market is called beta day, where the Dow Jones is up or down 100 points, and the Nasdaq and the S&P are up or down 1% or higher.
Hmm.
And they're all in correlation. Like if the Dow Jones is up 100 points, we want the Nasdaq and the S&P to be up 1% or more. It's all in congruence.
Yeah.
We can't have one of them in the red, one of them, all three have to be in the red, or all three have to be in the green.
Right.
And frankly, as volatile as the market is now, you want it. We want the Dow Jones significantly in the green or red. 100 points is like nothing, because we've seen when the trade tension first started, where the Dow Jones opened 800 points up and then closed 800 points in the red the same day. It's the market has never been this crazy before.
Yeah, no, not at all.
So you want it significant. You want the Dow Jones up or down enough points where it's at least 1% up or 1% down. So it's significantly on one side of the fence. And even then, you could have one announcement that, hey, there was tension between Donald Trump and China, and the trade wars escalate, and that could take it all the way over to the other side in a matter of minutes.
Mm-hmm. Easily. And that's why it's really smart to trade with a whole lot of risk management. I do want to take a second to let our viewers know that when you're doing this, number one, this is not financial advice. We're not your financial advisors. If you do want to learn some, we have links down in the description. We can teach you a whole lot of stuff. We have a whole lot of stuff to teach you. Go to our website and check us out. But when it comes to using leverage and taking trades on Nasdaq, or whether it be QQQ, SPY, or Euro USD, whatever you're trading, it's really smart to leverage well and risk light. You know what I'm saying? So find a sweet spot for where you like to use your leverage, because a lot of traders don't really understand the leverage that they're using. So like they don't understand how big of a loss that they can actually take with some of the trades that they're taking. And it's like he said, the just a quick announcement from one bad one bad trade deal talk day, you know what I'm saying? And then the markets flipped 800 points, and now your account could be crazy in the red. But if you manage your capital well, then you won't have to worry about that. So just make sure y'all risking light, getting this in-depth analysis and information that y'all getting from us.
Yes. Oh yeah, and as far as you mentioned with the bank runs, this is something that hasn't been really advertised. The first quarter of 2025, we already had 25 banks go under.
I didn't know
And
that.
that's just not. It's not open.
Do you have the names of the banks that went under?
In the first quarter of 2025, the first 3 months, we had 25 banks are no longer. 25 U.S. banks are no longer. So that 4,650 banks, or whatever that exact number is 25 banks less now. So, and I'm looking at it, they don't want to really put this out in Bloomberg and CNBC because that may cause a panic.
Mm-hmm. Oh man. Hey, algorithm, don't try to block us. We're just trying to give them the good sauce, guys.
Exactly, because it's like when people hear that, they go like, "Oh, what's going on?" And thousands and even millions of people can run for the bank and get scared and start pulling their money out.
Do you have a list of the banks that went under? I can't find it.
Yeah, I just got that news on Yahoo, but I'm gonna get the list so I can see exactly, or I know which. Yeah, I can get that. No, oh yes, I can get that for you because it's a website. You can go to PCBB Banks and Mergers, and that will tell you the list of each bank or credit union that was bought by another bank or credit union that month. And that's where you get the data. So if they're saying 25 banks dropped in 1 quarter, then that's an average.
Yeah, So not all of these are closers. Some of them are acquisitions where folks just don't have enough to pay their bills, so they're just saying screw it and selling it. You know what I'm saying? Yeah, okay.
Exactly.
But it happens. Yes, it happens so behind the curtain and behind, you know what I'm saying, like under the rug that most consumers don't really know what's going on, and then by the time it does hit the mainstream, it's mad too late because all of these folks then made their moves to get out of Dodge.
Yes, and last year Jerome Powell, when he gave his speech after the interest rate announcement, he did say there will be banks failing.
Oh, Premier Bank could be. Premier Bank sold.
Yeah, he said it. So, and it's happening because what it's looking like is when it's all said and done, it may just be just a few of the major mega banks at the top pretty much controlling the whole sector.
Yeah, I can see. So it's like there's a bunch of credit unions buying out a bunch of failing banks, basically that I'm looking at.
Oh, you went to the website?
Yeah. I'm looking at it now.
Oh yeah. Yes, and it shows you every month. Yeah, credit unions is kind of like seems to be making a stance, a comeback.
Yeah, credit unions are buying up a lot of assets. They're trying to get a little more market control because the thing is, I think the tactic is if the credit unions can get more assets and more control, then more consumer lending can flow back into the marketplace with a little more ease. So it's like I don't hate it, but it's a tactic to what I think is one of the better tactics to attempt to minimize the damage of the system that's been built. You know what I'm saying?
Yes, more and more people seem to be gearing towards credit unions because they've got better terms and conditions than most of the banks.
Right. Yeah.
If you need to finance something, they'll give you lower interest rates, and the money you keep in the credit union, they'll give you a higher rate on your money.
Yeah.
So with those two aspects, people are like, okay, I should go ahead and make this transition.
Hmm. If you gotta listen, if you got a relative, or you ask your grandma, ask your auntie, like, because usually the how most credit unions work is you have to have like a relative or some type of connection like that to be able to be eligible um for entry. But most people got some type of connection. That's why it's never been too much of an issue for people to go get a credit union. TDB is about to start banking with well, actually, I don't know if I should advertise who I'm banking with. um but we're gonna get it. We're gonna be banking with a credit union just because there's a lot of benefits for small businesses and working with credit unions. So I'm gonna definitely be taking advantage of that. Y'all should definitely take advantage of that. um they're buying out small banks, most likely to give y'all some better rates on probably car loans, mortgage loans, personal loans, debt consolidations, and all that stuff. So if you want to fix your credit, one of the first things to go do is get it with a credit union, because like they help you. They help you a whole lot. And if you have a small business, go get with a credit union because they help you a whole lot. All right. Moving on though, let's talk about our top trade setups. I want to so we did say we are decoupling from the USD, but I do want to talk about I still want to talk about Euro USD. It's definitely looked strong in the past like 2 weeks. It's rallied pretty heavily. I marked off an area for a pullback, and then it tagged it and moved on. I didn't actually trade it; it just tagged it and moved on. But I believe that if we can get above, let me see, if we can get above this 1.15300 level, then Euro USD can fly with the dollar falling. And it has, I mean, it has. Let me look on my. It has quite a, yeah. Like I thought, it has quite a lot of room to run up. It's the last major high at 1.23065 ish. That's like a good. Let me see. Let me stretch that. Yeah, it's like almost 800 pips away, and it doesn't look like a crazy move. Just looking at the overall picture of everything. So like once this level gets broken, I personally would take a small entry on a pullback, like a retest of that level. So I'll be looking out for that, and then EU or GBP. So um conversely,
Yes.
I'm looking to sell URGBP, but I think I was looking to sell URGBP, but I think I may hold off on that because the level that I wanted to get broken didn't get broken, and prices kind of moved away from it. So we'll see if price revisits that. And if it does, then we'll look for that to get broken and see if it wants to trade. But right now, what I'm looking at on URGBP is an open chart for a slight buy. I think price may go test out this little swing high at 8.85418 ish. Which is not it's not too big of a move, not too crazy of a move, but we do have like a little retail reverse head and shoulders there. So I feel like path of least resistance is probably towards the upside a little bit on EURGP, but fundamentally the GBP is stronger than the EUR. So like the fundamentals and the chart are disagreeing with me, so that's why I'm not personally looking to take a trade right away on EURGP. And then EUR chef, let me pull that up, EURCHF real quick. um, we were looking for the last swing low to get broken before getting in on EURSF. And then it just didn't happen. Price kind of just stayed choppy, like about 50 pips right above it. Um, maybe next week we get some more EUR data that either gives us some negative or positive. That'll give us some more direction. Things have we got mixed data on the dollar. We got euro. We got mixed data on GBP. So everything came out with sideways movements. We did catch a few little trades here and there. But for the most part, we haven't really caught anything big or anything like that this week so far. Mostly just kind of staying tapped in, understanding what's going on, and kind of seeing through the fluff.
Yes, the Euro USD is probably, especially with everything that's going on with the US dollar, is that 4 hour period when the US stock market closed in between where the Asian market opens.
Mm-hmm.
So a lot of people just doing some just simple scalping in between those 4 hours. They'll get it like on the 1 hour chart and just do some small frequency price adjustment to scalping in between those 4 hours because they just want to stay on the 1 hour chart because they want to get in after the U.S. stock market closes and be done with their scalping before the Asian market opens.
Yeah, before there's too much extra liquidity in to be like jacking people's little stop losses out. I don't.
Exactly.
I don't. It's actually funny that you mentioned scalping because the next segment was the capper facts. So we could, and the one I had was Forex trading is just gambling because a lot of people think that it's just gambling, but a lot of people think that any type of trading is really just gambling because they don't really understand it. But in reality, forex trading, when approached with a solid strategy, risk management, continuous learning, calculated risk, you know what I'm saying? Uh, um, un- Unlike gambling, which is just like chance and some probabilities, you know what I'm saying? You can put a little bit of thinking into gambling, but you know what I'm saying? Unlike gambling, it doesn't take like discipline in gambling to do it and do it fairly, successfully. I guess successful gambling, I guess, is just leaving the casino with a little bit more than you came, or anything at all, really. With trading, it's like you got to be disciplined and consistent over time, and that's what makes you win. You know what I mean? That you don't just pop out with a high win rate just because. It's because of the fact that your trades are checking your boxes. They're meeting your confluences. You're not taking entries just because of FOMO. Like, you're tapped in. You know what I mean? And that's what separates trading from gambling, because you're really
Yeah.
making decisions off of actual information. With gambling, it's just like, I hope I win.
Yeah, you just got a feeling.
You know what I'm saying? um Oh yeah, I did wanna before we gotta get out of here, I did wanna talk about the stock market a little bit. Nvidia real quick is still being the behemoth that it is. I just wanted to take a look at her chart real quick. Yeah, Nvidia's not doing Nvidia's chilling up at 140 right now. 140.76. Not bad. I honestly thought before it moved on to this 140 level that we were gonna get some type of catalyst to push it to that 125 to bounce off. But um, you know, stocks traded with different catalysts. You know what I'm saying? They trade a little bit differently. They can kind of be a little more overextended than forex pairs and indices are generally. So as of right now, until anything negative comes out on Nvidia, I'd see that as a potential buy at this level of 137.59 ish. You could see a bounce from there, but I would need to see some good data come out when it gets to around that level. You know what I'm saying? Like something to really tell me, okay, yeah, Nvidia wants to buy from here, because what I'm saying, that still looks good just from a general trading perspective. That 125 level does look good. Um what are your thoughts?
Oh, yeah, because right now it's down 0.8. 153.13.
My phone.
$662. That
Okay, hold on. Let me check something real quick. Check. Back on there.
You went out of it again?
No.